Alright guys, look, Nvidia is gonna fall. It might not happen after the earnings tomorrow, but eventually it's gonna fall, and I'll tell you why. Investors are finally gonna figure out that all the maximum, most optimistic bets on the company have gone into the price. I'll prove it to you with some numbers. I'm gonna walk over a very extremely optimistic scenario and show you how the company is so overvalued that it's basically impossible to invest at these price points. I'm going to do a numbers analysis. I'm going to take a look at the revenue, the earnings, the growth. I'm going to compare it to other companies that have experienced what Nvidia is trying to experience, and then show you how just putting your money in the S&P 500 and have it reinvested dividends for the next 16 years will yield the best case scenario for Nvidia from here on out, given this price point. Now, it's quite the claim, and I'm going to show it to you. I have it already, but first, if you're not familiar with Nvidia, I don't know where you've been. Okay, Nvidia is basically the highest tech company. You know, some people might say, oh no, Tesla, no. Well, actually, Nvidia, I mean, they power everything. Graphics, I mean, they have so many products and technologies. That does not go into my argument whatsoever. I mean, you can read about it over here, just a brief description of what the company does. They do a ton of stuff. All right, I have a huge, what was mine? A 1090. Is it a 1090? I'm sorry, not a 1090, 3090 or something like that. I have a very expensive graphic card in this PC that I'm filming this on right now. I'm a fan of Nvidia, like, don't get me wrong. I love Nvidia. I think they make top quality products, cutting edge. They've been leading basically the tech war for quite some time now. But just because we have an outstanding company, just because you have the cutting edge, does not mean that it's a great investment all the time. All right? It does not. Let's start with the price. Let's figure out why I'm so pessimistic on investing in Nvidia and why I think it's going to fall. So first of all, I'm going to do a quick overview. The website that I'm using is called stockanalysis.com. It's a free resource for everybody. I'm not affiliated. So the market cap of the company is $771 billion. And immediately my eyes jump right here at the 179 price to earnings ratio. I know. Pointing out to PE when it comes to Nvidia is a fool's game. We all know that it's a growing company. In fact, a brief search shows me that they double basically their revenue and earnings. They move in lockstep because the profit margin is always around the 20%. They double about every 4 years, and that's what I'm going to be basing my argument on later on. So, but just let me go through the numbers just to show you some of the absurdities, all right, and just to give you a really big picture of what's going on. Now, this is also not a core argument, but just for entertainment's sake, I just want to point out the 0.05% dividend that Nvidia is giving out. Now, this actually has a payout ratio of about 10%. So if you double it by 10 and make it a 0.5% dividend, it would actually take up their entire earnings. So that's how little the company earns. Okay, it earns 0.5%. 0.5% per year. Okay, so they pay out 1/10 of that in dividend. So I mean it's quite comical. So anyways, this is a brief overview here, this little chart as to how the revenue and earnings have been traveling over the last 8 years or so. The blue bar is the revenue, the green bar is the earnings, but we'll take a look at these numbers a little bit more in depth. So straight to the financials. All right, first of all, actually, before we do that, let's play around with the price. So today they're down like 0.28%, whatever. Last 5 years, this is what's been happening. This is the peak in 2021 when all the stocks went bananas. And then this is the wrecking 2022 all the way to October. I guess the bottom was in October 10th or somewhere around there at the $100 level. Now, you could make an argument about buying Nvidia at 100, but definitely not at over 300. So let's move on to the financial. This is my favorite tab here. So first, revenue. This is the big number, right? Growth company revenue. It's definitely growing quite a lot. In the last 9 years, it's gone from $4 billion to $27 billion per year. Quarterly, it looks kind of like this. There was a big drop off in 2022. Slowing it down from this exponential X2 growth trajectory that it established during the 2018 to 2021 period. So it's kind of normalized and it's forming a more familiar exponential graph that's not shooting quite up that fast. So the net income is going to look like this. So the previous 2 quarters, they actually didn't retain too much earnings there, just 660 to 680 billion per quarter. This one, they're starting to earn a little bit more at $1.5 billion. But these earnings are very, very small. I mean, let's go to annualized so you can see what it looks like. Okay, this is what it looks like. So 4 billion a year here. The 2021 was kind of a record holder at 10 billion. As far as the shares diluted, they don't actually dilute their shares. They keep them constant. We'll go back to quarterly real quick. They keep them constant because they don't really have a need to buy back or issue new shares. Obviously, they've actually been taking down the share count by a tiny bit in the last few quarters. So, free cash flow per share, 0.71. Okay, so dividend per share, there you go. So they've been growing their dividend a little bit, by like 1 cent or half a cent every year or so. Before 2018, when they decided to stabilize it around 4 cents per share for every quarter. The profit margin, this is a key number here. So it's 23.37 on the latest quarter, but it's been as high as, it's been as high as like 40 or almost 40%, but that's definitely unsustainable. Like this profit margin, I'm guessing, I'm going to give it an optimistic stabilization of about 25. I mean, that's really good to be at. It's a good level to be at as a company. That's kind of what Apple is at, and I think they're one of the few companies that are able to sustain profit margin at that level. It helps to be cutting edge. It helps to be almost a monopoly on the high-tech stuff, at least what Nvidia is doing. So I'm going to give them a 25%. So that's what I'm going to be basing my argument around. Okay, next. So here's what I got. Okay, so the company's worth, the company's worth, like I mentioned, $771 billion in market cap. It has a little bit of cash, so the EV, enterprise value, is about 769.5. So I guess that leaves a net $1.5 billion in cash. So, talked about the P ratio already of 180. Price to sales ratio is also really bad at 28.58. Price to free cash flow is 202.47. Okay, so you can see the overvaluation there if you are familiar with some of these figures. So I don't need to really go into it. But let's take a look at it from a different perspective, okay? How about this perspective here? So I mentioned that Nvidia has been doubling its revenue and earnings about every 4 years, okay, for the last like 12 years or 13 or whatever, 16 years. Under a very optimistic scenario, okay, we're going to say, this is the core of the argument here. So I'm going to try to unfold it in the next few minutes, see if I can do a good job. Let's say this continues. This is a very optimistic assumption, by the way, because the technology competition is very, very great and it's accelerating and other players are coming into play. And I'm not even thinking like AI or whatever. Like all the other companies are doing all that stuff too. Okay, so I'm not factoring into that. I'm just assuming that Nvidia is going to stay on top of the game for the foreseeable future. Not just foreseeable future, but for the next 16 years, just like it has been for the past, it's going to stay on top. Number one, top dog, optimistic scenario. And we're going to assume that it keeps doubling its revenue and earnings every 4 years. So right now, roughly, revenue is 25 billion, earnings 5 billion, let's say. Okay? After 4 years, 50 billion, 10 billion. After 8 years, 100 billion, and then 20 billion. After 12 years, 200 billion, 40 billion, and after 16 years, okay, invested in Nvidia, we're looking at a $400 billion revenue, which is, by the way, still 300 billion short of its current valuation, market capitalization, and 80 billion. Now that puts us, if the market cap, if the price stays the same, if the market cap stays the same, we're looking at a PE of 10 and 16 years with exponential growth, doubling every 4 years. If you get no gain. Now, obviously, the price is going to gain by then, and it's going to assume some further future growth, and that's fine. But we have an example, actually. We have an example of a company that has 400 billion in revenue and about 100 billion in earnings. That company is Apple. And that company has just as good in margins, the 25% margin, okay? Same margin, sustainable, greatest company, greatest investment of all time, right? The most successful company of all time, basically. And still has a bright future. Overvalued kind of richly, okay, still. So, I mean, let's take a look at Apple real quick. So it's got a market cap of $2.74 trillion. Trills. We're in the trills here. Okay, with a PE of 30. Look at this. PE of 30. So if we assume similar valuation, we're looking at Nvidia being worth the same as Apple in 16 years. Where you could buy Apple right now. But let's say, in 16 years, we get the same similar valuations of the company matures, and it pulls in the PE a little bit. And this is basically saying that Nvidia is going to achieve what Apple did, which is very, very, very difficult. Okay? We're only looking at about a maximum of 4x improvement in price, in market cap, if the valuation is similar. Nvidia is not going to be valued the same it is now at 200 PE in 16 years. I'm sorry. That's not going to happen. Okay, so this is a very good optimistic scenario. This means nobody dethrones Nvidia. So Nvidia is worth same as Apple in 16 years, 4x market cap from here. Fine. From current prices, fine. But you could actually get the same amount of appreciation just putting your money into the S&P 500 and reinvesting for dividends. If you don't believe me, I have it right here. I calculated it for you. Look. Up top, it's kind of hard to see, but the average return with dividends reinvested is 10.69% from 2006 to 2022. Let's assume that the next 16 years look identical. Then we're looking at $1 growing to $4.34 in 16 years. So that's more than 4x. More than 4x, just sticking your money in the S&P 500 and reducing your risk almost infinitely, from being invested in just one single company. So what's a better investment at this price point? A single company that has basically a maximum case scenario of 4x, and then all the risks of being outcompeted, all the risks of not hitting their numbers, all the risks of growth slowing down, all the risks of high interest rate environment coming in, all the risks of some of their technology being faded out, like maybe perhaps a huge demand factor like crypto or something like that, where the graphics cards stop being in demand for whatever reason, coding changes or hardware requirement changes. I mean, at one point, for the cryptocurrencies, by the way, for Bitcoin farming, you had ASICs take over from processors and graphic cards. Like, I remember those periods back in 2011. I'm not a crypto guy, by the way. I don't like it, but I did used to mine back in the day, so I know a little bit, a thing or two about it. So the hardware requirements could change. They could start making more specific, hardware for it, and the graphics cards might fade out to just being graphic cards. Also, their price might drop because of that, right? They might not be selling, the 3090s or whatever the hell they have for $3,000, $4,000 anymore. Is it 3090 RTX or something like that? I have to check. Actually, it says it right here. Hold on. This is no cuts. This bugs me. I want to tell you exactly what graphic card I have. Yeah, I do no edits, so you're just gonna sit here for 5 seconds. Hold on. Alright, so it's GeForce RTX. I think GeForce RTX 3090. I think that's what it is. Alright. Anyway, sorry about that. So there's my argument. Okay, so S&P 500 reinvested dividends for the next 16 years, better than Nvidia, starting at this price point and without any of the risks. So tell me what you think about that in the comments. This is where we kind of start becoming friends. Okay, and you tell me what you think. Tell me why I'm wrong. Tell me why I'm dumb. Tell me why I'm genius. And also, if you are interested in any other companies and you want me to take a look at it, please, write in the comments below. Like, I'm more interested in conversation than anything else. I want to just bounce back ideas back and forth. But definitely, Nvidia is not a buy for me. I might even short it. Okay, I think it will fall, and eventually I think investors will come to their senses and realize that there's more risk than gain in this name. So, with that said, let me know what other company you want me to review, what you think about this topic here.